Sure, absolutely. So they come in, I would say, 4 benefits. They're available, they're fast, they come with little underwriting guidelines, and you could use them for gap funding. So let's talk about availability. When you're working with a bank, banks do big time underwriting, and they have a whole team of underwriters. They spend a lot of money in salary to make sure that the loan fits a certain guideline. But with short-term loans, the lender's mainly looking at your cash flow, and that's what makes a short-term loan available. What's fast is they're using fintech technology to quickly look at your cash flow, look at your credit, and look at your business credit and make a quick decision. Gap funding, it allows the business owner to look at an opportunity and fill a gap of future revenue by getting the money today. So those are the main differences. The flexibility of short-term business loans are that they can take advantage of an opportunity. So what do I mean by that? A small business owner may be in the holiday season and they have an opportunity to purchase handbags or shoes that all the girls want during the holiday. And a vendor reaches out to them and says, hey, listen, I got a truckload of these handbags and I'll give it to you at 50% off, but you got to buy them now. Well, I need to access revenue in the future today, and I need a quick decision. So by going to a short-term lender, you can reach out quickly within 24 hours, have, say, $50,000 put into your bank account. Then you can turn around and buy that truckload of handbags or shoes, put them on your shelf, mark them up, and make a great profit. Yeah, some examples of short-term business loans that I recently did are one, let's say transportation. I'm able to get long-haul truckers access to capital so they can take on new routes and new opportunities, such as you're going from California to Connecticut but you need fuel and you need hotel, you need the working capital to get from here to there. So we're able to get an advance on that run from California to Connecticut, and so the driver has access to capital, say $50,000 to $100,000. Another example could be in the retail space, where you have an opportunity to buy, product and today at a discount, and so you can turn around and resell it in the future. Another example may be an emergency. You have a truck, or you're in landscaping, and your large, Ford truck breaks down, and you need to fix it immediately so you can get back on the road and keep your business going. So it helps with emergencies, it helps out with opportunities, and many other benefits. Short-term loans helps out small businesses take advantages and stay ahead of the competition by getting access to capital quickly, where a bank will get lost in the minutia of the underwriting guidelines, and before you know it, the opportunity was lost. But with a short-term lender, again, they're just looking at cash flow and some other criteria to make a fast decision. When I mean fast, within the same day or 24 hours, the money's in your bank account. And so again, it's an advance, so they're looking towards your future receivables and revenue, and they're providing it to you now so you can take advantage of that opportunity. So again, it's quick decisions, and a lot of, they're not really getting lost in your personal credit. It's not so much about your personal credit, it's more about your revenue and your cash flow. If you have good revenue, good cash flow, we'll find a lender for you. The key factors are, when you're choosing a lender, is just choose BitX. And the reason why is we connect you with the right lender, right loan. We've done all the research. We know who the A lenders are and who the Z lenders are. And the worst thing you can do is go by yourself and go and be an A customer and go to a Z lender and get a Z rate and a Z term and be taken advantage of. So with BitX, we'll take a look at your needs, wants, and goals. We know where you lie within the spectrum of lenders, and we're going to take you to the appropriate lender and get you the appropriate interest rate, the appropriate term, and appropriate early payoff discount, and we're going to negotiate for you because we have the connection with all these lenders and they want future business from BitX. So they're going to work with us to make sure from a coaching standpoint, you're taken care of. Some tips and advice for comparing lenders, again, is come to BitX. We've done all the heavy lifting for you. We know our lenders, from our A lenders to our Z lenders, and we've done all the research. But if you're going to go at it on your own, you want to make sure you understand what rate they're charging you, what term, is it a 6-month or 12-month? Do they provide an early payoff discount? And if you run into a situation where you're having a hard time with your cash flow and hard time paying it back, will they work with you? What are their terms for possible default? So understand the lender and understand even the fine print. So all is very key. But with working with BitX, we're going to coach you through that. We know all the lender's rules and fine print and how to, get a successful yes and get access to the capital. The most critical part of a short-term loan agreement is understanding the fine print. What does it mean if I default or if then? Because as a business owner, when you're selling or taking on a short-term loan, you're selling your future receivables. So let's say you take out a $100,000 advance. Well, that next $100,000 in revenue is the lender's. And so if you default, what does that mean to you? And what are the ramifications? And so you need to understand that. And you need to understand that this $100,000 is no longer yours in the future, it's theirs. Yeah, so the details of a loan agreement can affect the business on the overall. So the business owner needs to understand their cash flow and understand how cash flow works. So let's talk about it. So when the business owner takes out a short-term loan, they have to read the fine print on the agreement itself. And then when they get to the underwriting phone call, the underwriter is going to re-review the fine print and what it means, and if there is an issue or how it works, what's the rate, what's the term, and make sure that the business owner fully understands what they're buying. And then if there is a future issue, it's best that the customer communicates and doesn't go quiet, saying, pick up the phone, Mr. Lender, I see there's going to be a bumpy road with my cash flow. What can we do and work out an agreement? That's always the best method, communication. So you want to know your interest rate. How much is this costing me? You want to know your term. How soon do I have to pay it back? Do I have to pay it back daily, weekly, monthly? What is that? And then if I go into default, what does that mean for my business and for my future cash flow, and what is the clawbacks that the lender has? So again, as a business owner, you want to make sure you're doing your due diligence, understanding the fine print, listening to the underwriter on the underwriting call, and then paying attention to your future receivables to make sure you're doing your part to honor the repayment of the advance. Yeah, a short-term loan can be incorporated in the financial strategy, absolutely. It's very critical that the business owner understands their cash flow forecasting, because just think about it, and when you play musical chairs, one chair gets pulled out, but what happens? There's one person still standing and they're out of the game. So what does that mean? It means if you're not forecasting your cash correctly, and for some reason there's some type of hiccup, but the lender still wants to be paid. And so you need to understand that. And so if a chair gets pulled out of your cash flow, will you be able to address it? And so understanding cash flow projections, forecasting, and how cash flow works in your business is critical before you take out one of these type of loans. Yeah, so great question. So the importance of cash flow management in a small business with a short-term loan is the same as running your home. If you're an employee working for a corporation, you get the same paycheck on a biweekly basis, And then you know what your rent payment is, you know what your car payment is, you know what your expendable cash is for going out to dinner is. It's the same with running a business. So you need to look to your accounts receivable and do your cash flow forecasting. And then you want to look to, say, your annual revenue. Let's say your annual revenue is $1 million. Okay, well, then you could probably support 10 to 15% of your annual revenue in a short-term loan, let's say $150,000. And you just want to make sure that you're managing your cash flow accordingly. And you're not taking out more debt than your business can handle. Because if you do so, that's where you get into trouble. Yeah, I got some tips and tricks. Always, the first tip is always work with BitX, because we'll connect you with the right lender, right loan. But again, you want to know who the lender is, and their rates and terms are also critical. And then how to benefit from a short-term loan. But back to who the lender is, you want to know what are their niche, what industries do they lend to, what's their specialty. And then with rates and terms, they all come in different shapes and sizes. Some are daily, some are weekly, some are monthly paybacks. So you need to really understand that. And then when it comes to taking advantage of an opportunity, there could be opportunity to, let's say, buy more products and at a discount and then turn around and resell it for a profit. And so, again, come back to BitX, because we've vetted all the lenders. We know where the great rates are, the great terms, the great deals are, and we can make sure that it's a fast and frictionless process for you. Thank you again for watching this video. We really appreciate your time. If you have any future questions, feel free to reach out to me. Please like, share, and subscribe. We really appreciate it.